Real estate is touted as the king of passive income, but it's difficult for the average person to get into because of the high barrier to entry. Usually, you need a ton of cash on hand. Fortunately, there are a few great ways that you can passively invest in real estate to get all of the benefits of owning real estate without the headache of managing properties, flipping homes, or having tons of money to begin with. In fact, there are several strategies that you can use to start passively investing in real estate with as little as $10. Between the stock market and new investing platforms, there are 3 great ways that we've seen to do this. That means with just $10, you can participate in the passive income and long-term growth of real estate without any of the stress that comes with owning your own properties. Stay tuned to learn all about REITs, fractionalized real estate investing, and crowdsourced real estate investing, and how you can start earning passive income with each of them. Number 1, REITs. First up are real estate investment trusts, or REITs. This is a type of publicly traded company that either owns, operates, or finances income-generating real estate. By publicly traded, it means that you can buy shares of stock in these companies through a brokerage account. These companies are like mutual funds for real estate investing. They pool capital from investors, buy and manage properties, and then pass the real estate cash flow back to the original investors. This means you can collect dividends from real estate investments without actually having to purchase, manage, or finance the properties on your own. In fact, you don't even need to know which properties you're investing in because the company manages it all for you. With this model, a REIT takes all of the legwork out of investing in real estate, allowing you to simply invest whatever dollar amount you can afford and then sit back and watch as your investment yields growth and passive income. And that income can be pretty substantial. REITs are required by law to distribute 90% of their profits back to shareholders in the form of dividends. Therefore, it's pretty common to see REIT stocks pay out 5 to 10% dividend yields, and in some cases, even higher. Types of REITs. Of course, keep in mind that not all REIT stocks are created equal. Properties in a REIT portfolio could include a variety of things, like apartment complexes, data centers, cell phone towers, energy pipelines, healthcare facilities, office buildings, or retail shopping centers. Some companies may focus only on one of these areas, such as retail apartment complexes, while others might try to maintain a diversified portfolio of properties. Furthermore, many of these REITs collect income through rent, just like you would if you owned a rental property. But some REITs are focused on the mortgage side of things, meaning they're in the business of giving loans for real estate and collecting income through interest rates on those loans. These are known as mortgage REITs, or MREITs. So before you throw money into a REIT stock, it's important to understand what the underlying portfolio of investments looks like. For those who don't want to stress about picking the best possible REIT stock, you can consider something like a REIT index fund. This is a single investment that gives you a slice of all of the REIT stocks on the market, so you can diversify across the entire sector and still get the passive income that comes with it. The most popular solution for this is Vanguard's Real Estate Index Fund ETF, or VNQ, which includes all US REIT stocks. They also have an international version with the ticker VNQI, which includes all non-US REIT stocks. After finding a REIT you like, all you have to do is buy shares through your brokerage account, whether that's at Robinhood, Fidelity, or anywhere else. Thanks to low-fee trading and fractional shares, you can start investing in REITs with just a few dollars. Number 2, pocket properties. The next option is a startup focusing on making real estate investing accessible to everybody, regardless of net worth, and this is pocket properties. By breaking real estate down into fractional slices or shares, they're able to eliminate cost being a barrier for entry for new investors. This ultimately means that more people can have access to real estate investments, because you can buy these shares for as little as $10 each. Through the Pocket Properties Marketplace, you can buy, sell, and trade shares of real estate just as you would with stocks. So they might theoretically break up a single property into thousands of $10 shares. You can buy one or more of these shares to get a percent ownership of the entire property, and thereby a percent ownership of its rental income and its long-term appreciation. While this is similar to REIT stocks, the key difference is that Pocket Properties allows users to buy slices of individual homes and not full portfolios of property. So you'll have to be comfortable with perhaps doing some research into a given property or neighborhood, as you won't get that instant diversification unless you buy shares of different properties. But this can be a great starting point for individuals who want to be more involved with market research and identifying successful long-term rental properties, which could mean even higher returns if you get it right. Pocket Properties is freshly out of their beta stage, so keep in mind that this is a newer platform. But if it works out, it could become the leading real estate investing platform that's truly accessible to everyone. Number 3, Fundrise. The last option for passive real estate investing is crowdfunding investment companies such as Fundrise. On these platforms, investors pool their money to invest in individual properties and then share in the income and appreciation of that property. Again, quite similar to a REIT stock, but with access to more specific investment opportunities and without the hassle of opening a brokerage account. Fundrise has several different account levels to choose from. For as little as $10, you can start investing in real estate with their starter plan, but at any point you can upgrade your account to gain access to more features and new investments. Regardless of what tier you choose, however, Fundrise will continue to find and add new assets to your investment portfolio. On your end of things, there is no requirement to add additional investments, although you can choose to do so whenever you'd like. All account levels, including the starter level, offer features such as dividend reinvestment and auto investments. You'll also earn at least a $25 bonus for each referral that you make to the platform. And on Fundrise, creating an account is easy and takes just a couple of minutes. From there, you just choose a portfolio strategy. After that, you can kick your feet back and watch as your dollars are diversified throughout a handful of investment funds that are custom tailored to the strategy you chose. Once your initial investment is placed, Fundrise will continue adding new assets to your portfolio so that it becomes stronger year after year. There are also many alternatives to Fundrise that use the same model, so if you want to look for other options, you may want to consider some of these. Groundfloor. Groundfloor is one of Fundrise's biggest competitors. Just as you can with Fundrise, Groundfloor allows you to open up an account and start investing with as little as $10. The platform is currently the only one around at the moment that offers high-yield, short-term real estate investments to the public. Unlike Fundrise, Groundfloor does not focus on large commercial real estate properties. Instead, the majority of real estate investments on the platform are things like single-family homes, duplexes, and the occasional apartment building. DiversifyFund. DiversifyFund is another competitor, but it has a higher barrier to entry, with a minimum required investment of at least $500. By going with DiversifyFund, you'll be getting into their growth REIT, which builds wealth by investing in high cash flow apartment complexes. Streitwise. Streitwise moves the bar up a little higher, with a required initial investment of $1,000. Streitwise states that they use this capital to acquire and manage a diversified portfolio of value-oriented investments to provide a source of steady and ever-growing dividends. Other platforms that you might want to look into include Roofstock, Peer Street, and Origin Investments. Each of these platforms has their own minimum investment requirements and focuses on different sectors of the real estate market. Fundrise is likely best for beginners in this category, while other services may offer more specialized investments for investors who want a few more investment options. More passive income investing. Between all of these options, investing in real estate can still produce huge cash flow, but without any of the hard work of owning property yourself. Plus, being able to start with as little as $10 makes it easy to test out the market and see if it's something you could see yourself doing long term. For other passive income strategies, check out our last video about 4 ways that you can make passive income in the stock market, which can also be done with any amount of money. Thanks for watching, and we'll see you in the next one.